Hey there, this is Brian Gormley again with another edition of Wear and Greater DC. Welcome all. If this is the first time you've joined us, the way it works, you guess where we're filming today, and you get a free gift certificate to a location of our choice that we announce in the little postscript below the video. First one to guess it right and to send it to support@cornerstonepropertieshomeinfo.com wins the prize. And we've handed out quite a few prizes thus far and gotten some good responses. So this is a unique little location here, and hope folks have some fun. Somewhat appropriate for the time of year as well. So a couple of good hints. I think you'll be able to recognize it pretty well after we do a little 360 in a minute. Anyway, the substantive tip, talking about short sales and tax implications today, is the following. There's a lot of confusion, I think, about tax implications of a short sale. It's somewhat complicated, so I understand that people are confused. Here's basically how it works. The general rule of thumb is, as a primary residence, you're not going to have any kind of tax liability. If you've taken out a purchase money loan and you're getting cancellation of indebtedness income under Section 108 of the tax code, and it's your primary residence, then the cancellation of indebtedness income is exempt. So in other words, no tax liability for that. If it's a refi in your primary residence, there's a little bit of a different analysis. It's a little bit more complicated. But generally speaking, most or all of that refi money as well will be exempt. Not always, but most of the time. And then on the investment side, you would not be entitled to that exemption for primary residences, but there is another exemption that would apply, and it's the insolvency test, the so-called insolvency test, where you tally up all your assets, tally up all your liabilities. Assets would be things like cash, stock, bonds, value of other real estate, whatever it may be, not income, just assets. And then liabilities would be things like student loans, credit cards, mortgages on the subject property or otherwise, etc. And if the assets are equal to or less than your liabilities, then you're not going to be subject to any tax. And it's a little bit complicated from there how it works. If you have assets in excess of your liabilities, you will be subject to some tax, but perhaps not as much as the indebtedness that's being canceled. So hopefully that clarifies things a little bit for people. Most, quite honestly, 99% of the time, don't have any tax implications as a result of a short sale. So it's really the rare exception that people can't fit into one or even both of those two exemptions. So hopefully that's helpful. If you have any questions, feel free to call or email us. Always happy to walk people through and to provide some good resources. In the meantime, happy guessing.